Hey everyone, Lewis here from EZ2 Digital. Reclaim your time, upgrade your lifestyle. Today, we're diving headfirst into a story that's been electrifying the tech world: the meteoric rise of more threads, China's answer to Nvidia. Is this a genuine game changer for AI, or just a splash in the pan? We'll unbox the hype, dissect their technology, and scrutinize their financial journey. Get ready for an intense look into a company that just made a monumental debut. Stick around as we explore these pivotal chapters: more threads' grand entrance, decoding their GPU power, the strategy shift clusters over chips, unpacking the Musa ecosystem and challenges, and finally, the unbelievable wealth creation and future horizons. Before the show starts, remember to subscribe to our channel, give it a like, and share today's content. Thank you all for your support. Alright, EZ2 Digital fam, let's kick things off. The past week saw an absolute frenzy on China's stock market, and guess who was at the heart of it? More Threads, the much-anticipated first domestic GPU stock, finally hit the star market. This wasn't just any IPO, it was the quickest approval for a tech board listing since 2022, sailing through in just 88 days from application to approval. What's the big deal, you ask? Unlike previous domestic players like Hygon or Cambricon, More Threads positions itself as the only Chinese vendor truly delivering a full-function GPU. Think about it: a chip that can handle both hardcore gaming and crucial AI training and inference. They're essentially aiming to be the closest domestic alternative to Nvidia. On its first day, share prices skyrocketed, opening up a staggering 468.78%. The market valuation briefly soared past 300 billion yuan, eventually settling around 280 billion. The sheer trading volume, over 15.3 billion yuan, and an 85.49% turnover rate, signal massive investor excitement. This isn't just a win, it's a statement. But is the hype justified? Let's dig deeper. Now, let's talk tech, because without context, specs are just numbers, right? When it comes to AI computing, three metrics reign supreme: compute power, memory, and bandwidth. Memory dictates model size, compute power handles data processing, and bandwidth determines data transfer speed. More Threads, since its 2020 inception, has rapidly evolved, launching 4 GPU architectures. Their latest, the Pinggu GPU, released in 2024, powers the S5000 chip. On paper, the S5000 boasts 32 teraflops in FP32 precision, with an estimated 80 gigabytes memory. Sounds impressive, especially when you compare it to Nvidia's A100, 19.5 teraflops FP32. It seems to be punching well above its weight, almost touching the H20. Meanwhile, competitors like Huawei's Ascend 910C offer 752 teraflops in BF16, FP16, surpassing some Nvidia cards. This precision gap could be crucial, raising eyebrows about whether More Threads' claims align with AI industry demands. Lewis here again, and this next part is fascinating. More Threads' revenue model differs significantly from Nvidia's. Nvidia primarily sells high-margin GPUs. More Threads, however, generates significant revenue from selling entire AI computing clusters. In the first half of this year, a single S5000 cluster sale alone contributed nearly 400 million yuan, over half their total revenue. This strategy, though lower margin than just selling chips, scales revenue quickly by bundling hundreds or thousands of GPUs. But building these massive AI clusters isn't just about throwing GPUs together, it's about how they connect. Nvidia pioneered this with NVLink, reaching 1.8 terabytes per second intercard bandwidth with NVLink 5.0. More Threads has its own MT-Link technology, with version 3.0 claiming 1.3 terabytes per second, a respectable figure. However, their current S5000 GPUs still use the older MT-Link 2.0 at 800 gigabytes per second. This gap between announced innovation and product deployment raises questions. Furthermore, scaling these clusters beyond a few thousand cards, like Nvidia's 100,000 card behemoths, presents enormous challenges in power, cooling, and system management. While More Threads' KUAE2 cluster technology can theoretically support over 10,000 GPUs, their largest deployed cluster has 2048 cards. Is their current interconnect and cluster management truly ready for the demands of next-gen AI? The jury is still out. At Easy2 Digital, we love dissecting what truly makes a company tick. For More Threads, their core differentiator is the self-developed Musa, More Threads unified system architecture. Unlike many domestic competitors who shed graphical rendering units for pure GPU, More Threads retained its 3D rendering pipeline. This was a risky move, as developing graphics drivers is exponentially harder than hardware design. Early products faced criticism for poor gaming performance despite impressive specs. They also developed MUSIFY, a tool to translate CUDA code to Musa, but this comes with a 10 to 30% performance loss, a significant hurdle for AI developers. The geopolitical landscape adds another layer of complexity. In October 2023, More Threads was placed on the US Entity List, forcing a shift from TSMC's advanced 7nm, 5nm processes to SMIC's N+1, N+2. While this ensures domestic production, it inevitably impacts yield and power efficiency, potentially widening the gap with global leaders. Scaling is another beast. While More Threads KUAE2 clusters can theoretically support 10,240 GPUs, moving past the 5,000 card bottleneck for power, cooling, and system orchestration is a huge challenge. This means their technology still requires significant refinement to truly rival the scale of Nvidia's deployments. The path ahead is fraught with technical and strategic challenges. Beyond the tech, let's talk about the incredible financial story unfolding. The More Threads IPO wasn't just about technology, it was a wealth-generating event. Founder Zhang Jianzhang, a former Nvidia global VP, now holds direct shares worth over 28 billion yuan. Early investors like Peishen Qianyue saw their cumulative unrealized gains skyrocket by over 5,825 times. That's not a typo, over 5,800 times. Shenzhen Minghao wasn't far behind, with 163 times. Even late-stage investors saw impressive returns, with some pre-IPO participants seeing over a 9x gain, and DeepSeek's Liang Wenfan's firm netting a 425% return on day one. These figures are staggering, fueling the China's Nvidia narrative. However, despite the massive market cap, More Threads isn't profitable yet, with cumulative losses exceeding 5.7 billion yuan since inception. They project profitability earliest by 2027, provided revenues surge and margins improve significantly. This highlights the immense capital investment required in cutting-edge AI hardware. Meanwhile, other domestic GPU players like Metax, founded by ex-AMD talent, are also gearing up for IPOs, demonstrating fierce competition. The race to build China's AI infrastructure is creating a new wave of billionaires, but it's a marathon, not a sprint, with immense financial and technological hurdles ahead. Is this a sustainable gold rush, or a high-stakes gamble?